Yo, yo, yo. Welcome. Welcome to the live stream. All right. Enough of that. Here we go. Let's get this covered. On Saturday, I was talking about how we're going to come down to this level on Ethereum. If we come back to this video right here, boom. Look at all that liquidity, all that green, right then and there. It says it's going to make a move up, which, well, let's see. Let's go back to it. What was this? Saturday. Yeah. Let's go on the hour chart. It's the 19th. All right. So I said it's going to make a move up. Didn't really make a move up until about here on the 20th. So I guess it is a day later. Did make a move up, but it just recovered what we were at. Now, back on this video, we had all the liquidity down here, and I said 2650 is where it's going to come and recover all of this liquidity down here, which we did. It even went lower to the high 2500s. So if we come back to our charts, where we go? Where was our low? We went to actually a low of 2500, 2508, 2502, and we were sitting around there. Now, we don't have that much liquidity anymore unless we keep coming down. This is the hour chart. But we got all this up here that we need to get to. We got these purple, pink, violet vector candles that we do need to recover. On the trend exhaustion, we're also at a high point where we need to come down, which we did come down, but we need to come down and recover this liquidity right here and just cover that really quick and then come up and hit this violet vector candle right here. What I'm really looking for is to come all the way back up here and kind of start testing this EMA right here and test the 800. I'd love to see it test the 800 because the 800 is probably going to move to this this purple violet zone right here, which is around 2800, 2850. Something around there that we're going to come back to. I don't know how soon we're going to get up there, but we are going to come back to it. But we do need the market maker to induce traders to come down a little lower because they keep buying the dip. And I mean, it's good, but it's not good because the more that they buy the dip, the more that we're not going to come back up. And we need to come back up quick. Going into the higher time frame, there's all that liquidity right there. It's going to start at the high 26, like around 2680, and it's going to go all the way to the 2700 zone. We have to recover at least half of that. But before we get there, we need to come here, which is the low 2400s, 2450 to low 2400s. And then even said, why don't we just come down even lower and recover this zone of 2200s? And this right here is where we really would like to see it come down to, is around 2000 to 2100. If we could get there, then we could shoot back up and eat all that. Because right now, we do have even more zones at lower prices with these blue vector candles. But it's not the ideal portions to go to if we want to continue with the bull market, because if we start coming down here, this is where it's going to look very, very bearish, and we're already looking bearish. A lot of people think it's a bear market, which is fine. That's where the market maker wants to induce traders. They want them to think it's going to keep going lower, and that's when they're going to start adding to their shorts and then keep pushing it lower and lower. And then what's going to develop is way more liquidity, like we see up here, all this red and violet. If we could keep getting more of that, that means we're going to have to come back up to it. But for right now, we got a decent chunk of long positions that we need to eat away. Now, this is the 4-hour chart. This is high time frames, because compared to these shorts right around here, there ain't much liquidity. Why would we even come up here when we have all of this down here? I know you don't like to hear that, but it needs to happen. I do think this 2000 range right here is something we need to get to. And if we break below 1800 on Ethereum, guess where we're going? To the 1300 zone, or at least 1500 to get that blue vector. Then, that being said, all this green will turn into red and violet, and it'll add way more all the way up here, and then that will create the imbalance that we need to start moving back up. It's a teeter-totter. You can't move away from it. You can't have more weight on one side. Right now, there's more weight on the long side. So we do need to keep coming down, make it even. Now, on the high block calendar or chart, it shows something different because it's on lower time frames. And the high block chart shows that we do need to have a reversal soon and start eating away all the shorts. But before we do that, the market maker is going to drastically move price down really hard and really sharp. And once he does that, then we'll come up and start attacking all this right up here. That's the same thing with Bitcoin. Matic follows Ethereum. We'll just go ahead and click right over. It's a 5-minute chart if you're scalping. Tons and tons. I mean, look at all this on the 5-minute. All the way up here. Recover at least half that, get to the $2 mark. That'd be nice. I mean, that's a nice play on the 5-minute chart. If you're scalping out here. This zone down here, this green, probably be taken out within next couple days or so. Let's go to the higher time frame. We got a lot. We got a lot of shorts that need to be taken out and tons of longs. Why aren't we coming down to this zone? I don't know. We will, though. We're going to take more out. Right here is a nice point. $1.24, $25. $1.25 is a nice point. I would say that's a good buy-in point for Matic. If you're looking to buy the dip, I would buy the dip at $1.25. Could go that low. I mean, there's a lot of liquidity there to take. As of right now, I wouldn't be selling anything because we are extremely low, and we are going to need to reverse soon. Sooner rather than later. It could be a week, 2 weeks, month, maybe 2 months, but we're going to get some sort of spike to the upside, maybe 6%, 8% pump, 10%, depending on how down bad these altcoins are. And with all the news media happening, speaking of news media, what we got today, got a bank holiday in Japan. So that's probably why price isn't moving too much, because US came back into today after President's Day being yesterday, and now Japan has a bank holiday. These are red. Could see some price movement later in the day today. Probably nothing to be moving. Rest of the week isn't looking too bad. I would say by the weekend, maybe we could start seeing a little bit of recovery prices. Not saying that we're going up, but recovery prices before we drop even lower. Let's take a look at next week. See what we got going on. Prepare. And no advertisements, please. Next week is looking. Wednesday. It's not too bad. Canada and the US right here. overnight rate. That might be a little price effective. Nothing too bad. Friday. Look for Friday. Friday next week, March 4th. That's going to be a big day. That's where you're kind of going to want to sit on the sidelines and wait till it settles out. If price moves up sharp, you know it's going to come back down sharp, and vice versa. If it moves down sharp, it'll move back up sharp. So we'll see what happens next Friday. That'll be something to be on the lookout for. That being said, just real quick on the hourly chart, I do want to see price come back up to the 2800s and even the 3000s. But before we get there, I do want to see it come down here to the 2000, 2100 zone. If we start getting closer to there, if we start getting down to 2300, you know we're just gonna drop in, eat away that liquidity right there. But don't be too bearish. I know everything is bearish right now. I know a lot of you are thinking, oh, maybe I should sell because price is going to keep going down. Well, that's just not the case, because at any moment in time, the market maker can spike it up, take your liquidity, and then you're going to think, oh, well, now the market's going back up, and I'm going to buy in, and then that's when you lose, because he's going to push it right back down again, because he could spike it, take out these zones all the way up to the 3,000, then come down and push it down even lower. Like we saw recently, like over here. Look what happened. Price went up, took out zones, and then it slowly came back down. So if you're in it for the long haul, my advice is to, well, not a financial advisor, but what I would do is I would buy the so-called dip. This is a good buy zone, but keep in mind price can and will go lower to the targets I mentioned before. I don't know when. I don't know if we could just go up from here, but I would say this is definitely a good buy zone to start putting in positions. I would not necessarily say put in long positions, but if you're looking to accumulate your margin, that's definitely something to look out for and do. That being said, do look for lower prices. Watch for the spike highs. Right now, we're not even testing the 800 EMA. There's nothing to be looking bullish on. But we are riding the 50, which is good. Let's look at the higher time frames. 4 hours is where I could get the better understanding. Yeah. Right now, it's not good. I do believe this is a lagging indicator that we are going to revisit these prices down here for sure, of these lows of 2350. Definitely revisit those and then work down to the 21 to 2000 range. But we could get these minor spikes here to 2800, almost 2900 to recover this, induce traders thinking that we're going up, and then kill their long positions on the way down and eat away the rest of these. That's all I got for you today. Stay tuned for tomorrow. I will be live streaming at 11 a.m. as usual. And we'll go over what happened. I do think this week has got to be still pretty bearish. I mean, with another bank holiday, price is not going to be moving that much. So keep in mind, accumulate. Today is a red day. Don't go crazy. Don't go aping in. Just get a little something here, a little something there, and stay tuned for tomorrow.